SPACs have been taking 2020 by storm. This new way of going public on the market has grown in popularity and has exploded this year. And now we have the first ever SPAC ETF being publicly traded on the market under ticker symbol SPAK. And in this video, we're going to analyze this ETF to determine if we like it right now and if we believe it has a lot of growth potential moving forward. So SPACs are special purpose acquisition companies. They are essentially a blank check company that is used when a private company wants to go public but doesn't want to use the traditional IPO approach. That traditional old-fashioned IPO way of going public is very costly to do and doesn't allow every company that wants to go public access to that approach. So now special purpose acquisitions have grown in popularity. And if we take a look at this chart that shows the proceeds from SPACs over the past 10 years, you can see as of late 2020, we have seen the numbers explode. In 2011, $0.2 billion were the proceeds from SPACs in the entire calendar year. And so far in 2020, there is estimated that over $50 billion came in from proceeds from special purpose acquisitions. So absolute explosion in popularity. And now we have a new IPO of different companies going through mergers and SPACs. And there's a new ETF being publicly traded under ticker symbol SPAK that you can get in and buy a basket of these IPO companies instead of picking individual stocks. So in this video today, we're going to do a deep dive on this SPAK ETF to determine if we like the price, if we like the future growth potential, and if we're going to buy in right now. As you know, everyone, I am the Gen Z investor, and every single day we talk about the stock market, go over different stocks you can buy and sell within your portfolio. And in this video, we're going to focus on the special purpose acquisition company and this new ETF that holds this basket of SPACs that may be enticing if you want to get into the SPAC world. So please hit that like button and subscribe. The SPAC ETF began trading on the market on October 1st, 2020. Initially, when they became public, shares were being traded at around $25.77. After the first few days, we did see a little bit of a price increase to that $27 mark. And as of late, over the past 2 weeks, it has been on a slight decline. Shares have only been being traded since October 1st, 2020, so it's been less than a month. It's been about 3 trading weeks since this ETF has gone on the market, so we don't have a lot of price history just yet to talk about if we believe it will outperform or underperform the overall S&P. What we're going to do is discuss the future potential for this ETF and what the goals of this ETF are moving forward. So this ETF and this fund was created from Defiance ETFs, which is a company that was founded in 2018, which builds ETFs designed for the next generation. So what they are is they are an ETF sponsor that has a bunch of different ETFs on the market that allow retail and institutional investors a targeted view into some subsectors of the market, leading in disruptive innovations. So they have some other ETFs on the market right now, such as a 5G ETF, a next-gen computing ETF, and a junior biotech ETF as well. But we're going to focus on ticker SPAK, which is the first ever special purpose acquisition ETF on the market. This ETF is first of its kind, and there are no other ETFs on the market with the same investing philosophy. So of course, this ETF is based and invested in SPACs, but they have a nice diversification over 36 different holdings that may make this an attractive holding for people who want to get into the SPAC space. So why this Defiance ETF is because picking winners of individual SPACs can be very difficult. But this ETF structure actually allows you to hold a diversified basket of various different SPACs in one single holding to provide not only some safety so all your money isn't placed in one individual company, but that diversity allows you to get into companies you may not have heard about. It actually allows kind of a private equity style of investing, which is usually only available to large financial institutional investors. So the current ETF has around 36 holdings and it's rebalanced every single quarter. 80% of this fund is held in IPO companies derived from SPACs, and 20% is allocated to common stock of newly listed SPACs that eventually, hopefully, will go through a merger with a private equity firm. So we're going to go over the fun facts, discuss how this ETF is structured even more, and go over some of their top holdings. So of course, it is traded on the New York Stock Exchange under ticker symbol SPAK. The current expense ratio is 0.45%, which if you were to compare this to a standard S&P 500 index fund, which you can essentially get for free, this is an extremely high fee to pay. But if you want to compare it to some other actively managed mutual funds, which have fees that range between 1 to 2% each year, then this might be an attractive price point. For example, if we're going to compare this Defiance ETF to some other major disruptive innovation ETFs on the market, such as ARK Invest and Catherine Wood's ETFs, her fees are higher than this, range from that 0.6 to 0.8% annual expense ratio. So this ETF's fee of 0.45% is beating some of their competitors. And as we've previously mentioned, there is 36 holdings within this ETF, and they have net assets of around 23.87 million. Less than 1 million shares outstanding on the market, and the previous close, like we saw, it is around $24 right now. So we have no return information on this ETF because it is brand new. We don't have information about the ex-dividend or the distribution date because it is still a company that's only been traded for about 3 weeks. So once we get more information about the total return, then we can get a nice comparison going with the overall market. So some of the top holdings in this ETF are some brand name companies, such as DraftKings, which is the largest holding in this ETF, making up around 15% of the fund. And in total, the top 3 holdings in this ETF make up over a third of the fund's investments. So ticker symbol DKNG, CCZ, and VRT are the top 3 holdings. And overall, there's some other more well-known brands in here as well, such as Open Lending Corp and Virgin Galactic, which makes up around 4.36% of this ETF. So what we're going to do now is just take a quick look at the top holdings of this ETF and how they've been performing as of late. So DraftKings, the sports gambling company, has seen a nice surge over the past year. 12 months ago, shares of this company were only around $10, and you can see here a rapid surge up over 331%. And you can see they actually peaked up around 547%, but as of late, since actually the start of October, they have been on a decline of around 33%, which is very interesting because this makes up 15% of the total ETF, and the ETF SPAK that we're going over today actually began going public on October 1st, 2020. So since this ETF has actually been public, on the day after this ETF actually went public, you can see here their top holding has gone down 33%. So that's kind of understandable to why we've seen a downward trend in SPAK over the past few weeks as well. The second largest holding, ticker CCC, currently trades at around $29 a share, and they've seen nice growth as well over the past year. Shares are up over 86% over the past 12 months, but again, over the past 1 month as well, they have been on a decline of over 12%. So when your top 2 holdings in the ETF that make up around a quarter of the ETF's funds have seen a decline over the past few months, or even the past few weeks actually, then it's kind of understandable that the whole ETF is going down as well. But when we zoom out over a 12-month span, both of the top 2 holdings have seen some nice growth, so you can't really base short-term performance really too much in this case, especially with some very volatile SPACs on the market. You can't focus too much on the short term. You got to believe that the SPAC industry will continue to grow, and hopefully on a longer term perspective, we will see just that. The third largest holding, ticker symbol VRT, was up 44% this year, but once again, over the past month, we saw shares see a rapid decline, down over 22%. So the past few weeks have been very hard for SPACs. The top 3 holdings have taken a beating since the start of October, which is kind of understandable when we take a look at the overall ETF's performance, that it has seen such a decline in the way it has. It's actually impressive that the fund is only down around 10% over the past month, compared to the top 3 holdings, which are collectively down an average around 15 to 20%. So it's nice to see that some of the smaller holdings in this ETF are holding it up and allowing it to continue to kind of stay at a decent level. So this ETF is the first on its market. The SPAC craze has been going crazy, and I believe this is a very high risk with some potential for high reward ETF. If SPACs continue in popularity and this growth rate of funds going into SPACs continues to excel into 2021, then I believe we may see a nice short-term jump with this ETF. But over a longer term play, I just think this is too risky for my personal liking. Some investors who love SPACs, who love and believe in the new way of trading and the new way of special purpose acquisition mergers in order to get shares publicly traded on the market, then this may be an awesome investment for you because you can get a nice diversified basket for not a crazy high expense ratio. But for me personally, this is still too new and too high risk. I like companies who are a little bit more well established and have some nice profits year over year. I don't really like picking companies who are in that initial growth stage where they're losing and burning tons of cash quarter over quarter. So for me, this isn't there just yet. I believe Defiance ETFs is another nice growth options in some other funds if you want to take a look at this company as well. So is this worth the risk? It is up to you. We all have a personal perspective on investing, and I believe if you want to get into the SPAC world, this is a great new alternative for you. And if you want to take the risk for the potential high reward that SPACs can potentially give, then I believe for a little bit of a cheaper expense ratio, you may want to take a look into this fund. One thing to keep in mind though, with high risk, high reward stocks, the high risk is always guaranteed, the high reward is not. So keep that in mind when evaluating this company and this ETF if you want to add it to your portfolio. So thank you for watching, everyone. This is the newest SPAC ETF on the market. I am the Gen Z investor, and I will see you in tomorrow's video.